Potential shift here, seeing if it's possible to grind out a living day trading. Quick disclaimer, please don't follow my trades. Even if I was the most profitable trader in the world, I don't think it would help anyone to actually follow another person's trades. That's not why I stream anyway. If I'm going to talk about trading, I want to actually show my trades, unlike, I don't know, everyone else who makes trading content. The magic trick that is everybody talking about how much money they win and yet no one showing their trading. I don't actually want to be one of those guys. Number two, streaming my trading actually makes me a better trader when I talk about it, when I verbalize my thought process. So that's why I'm doing this. Don't follow the trades. It's Tuesday. I took yesterday off. More domestic stuff, another water leak. Anyway, yeah, I've got plumbing issues, major plumbing issues to deal with. In fact, if it rains today, I'm going to have to actually, log off and go take care of plumbing stuff. But the rain hasn't started yet. It is 9:30 a.m., just ding the opening bell. Let's see what we've got. SPY up 4 points right off the bat. Let's look up 5 things to know this morning. 5 things to know before the market opens on Tuesday. Iran watch. U.S. continued attacking Iran for the 10th straight night. Stocks didn't appear overly. I've said this before about the Iran war. Wall Street does not seem to be rattled or even against this war, quite honestly. This war does not seem to bother the market whatsoever. If you want to play it, oil obviously is moving higher off of it. I sort of think that play is late now. We've already jumped from 100, 110 area up to 130 today. That trade's a little played out in my opinion, but that is the play, or was the play, if you wanted to play the Iran war. Shorting this market, no, not it. Especially during earnings week. Into high gear. GM, talking about GM. I remember during the financial crisis when GM went to 1. Everybody thought it was going to go under. Resignation letter. Center for AI is going to resign. Okay. Production delays. Food and Drug Administration. Oh, the lettuce. The diarrhea lettuce. All right. Yeah. Okay. They don't really know where the diarrhea lettuce is coming from. That's great. What was the other thing? Let's look up the economic calendar. Since I didn't do this yesterday, I like to do it on Monday. Nothing scheduled on Tuesday. Nothing scheduled Wednesday. Thursday, initial jobless claims. That's not important. That's a weekly number. Flash PMI. No. Okay. New home sales, 10 a.m. Friday. Again, home sales generally aren't a market mover. So no big economic reports incoming. It is earnings week. We are in the heart of earnings season right now. So as I've said before, 4 out of 5 times in the last 10 years, earnings season is bullish. We're right in the middle of it right now. And what I can see is, honestly, the market hasn't moved. We've still got another 2 weeks to go for the heart of it. This week and next week are the bulk of earnings season. But you haven't seen much movement so far. If you look at the 6-month chart, we certainly don't have any real upward movement, right? We're still in this flag pattern that I've been talking about. If anything, it looks like the flag pattern has broken lower. If this was the bottom trend line right here, if that was the bottom trend line, it looks like we're actually breaking lower on it. Yeah, it does, honestly. Tell you the truth, looking at that makes me a little bearish. More than a little bit, to tell you the truth. That's a pretty bearish sign now. We're now entering the third day of breaking below that trend line. Not a good sign. SPY at 745. What did we even do yesterday? Yesterday was actually a pretty nice trading day. When I was looking at it here and there, I wasn't going to trade it, but looking at it here and there, it did follow some regular patterns. We did have a nice morning V. We broke lower. We continued lower for basically the rest of the day. I mean, that's kind of textbook what you want to see. This is yesterday. We've got a nice morning V here shape. Then we break lower. Mid-morning bounce, not surprising. You often get a mid-morning pushback, the 11 a.m. pushback, and then the rest of the day down, following the trend that we started in the morning of breaking lower. I mean, really sort of a textbook trading day yesterday. Not that there was much money to be made. We didn't move all that much, but it at least followed familiar patterns. It wasn't a complete mystery, at least looking at it right now. This looks like a market yesterday that I would have been somewhat familiar with this pattern of movement. Because for the last 2 weeks, we've just been doing a lot of whipsawing up and down. Haven't been too familiar with what's been going on there. So I have to say, with this break lower here, my initial thought is, plus we're up 4 points to open the day. My initial thought is bearish. That is my initial idea. But need a setup to play it correctly. What would be a good setup here? If we bounce up to 748, that'd be a nice setup. Even 747, that'd be risky. Getting short at 747, not sure I want to take that on. It'd be the worst play in the world. If you feel bearish, getting short at 747 wouldn't exactly be the worst play in the world. In fact, I may try that. Yeah, I may try that. If we get up to 747, I may try to short it. Tight stop. Other possibility is we break below 745. 745 was significant yesterday. Looking at the chart, it does look like it presented well, maybe, I don't know. I mean, it looks like it was like sort of the center of the chart yesterday. I'm not sure it presented too much resistance. I mean, 744 seems to be more significant yesterday than 745. That 743.5 area, that weird area, that's been an odd level. It was an odd level all of last week. 743.x. Strange. Generally, I don't like to play the open. Find it to be noise. The earlier in the day it is, the more noisy it is. The later you go, more information you have, the less sheer noise you have. I will say yesterday's trading patterns were encouraging. It felt like, as I said, it felt familiar. It felt like whatever force, algorithm, institution, whatever had been creating chop in the market wasn't as present yesterday. That's just a feeling. I don't think there's any way to make money on that, but it just felt like the market was following patterns which are identifiable. Don't know quite how to put it. Just felt safe. Like you weren't going to get chopped up and thrown into a buzzsaw yesterday. This morning, I'd like to see a nice morning V shape, you know, a down shape and an up move, or an up move and a down move. Not quite seeing that yet. Like to see that. So as I was driving around yesterday, taking care of various plumbing and domestic issues. Oh man, by the way, it looks really nasty out right now. If it starts storming, gonna have to deal with leaks. I did think of a good rule for concentration and attention to trading, but first, we're gonna break below 745. Do I have any interest in this right now? I really don't. I don't, because 744 was a level yesterday. I'm not clear on what my target would be. It's early in the day. I am bearish. I just don't see the setup here where the risk reward is. What's your out? 744, 743.5. Even if those are your outs, you're only picking up a point. And I would think it's... I mean, you're trying to grab 1 point, and it could just as easily bounce on you. And there's just not enough... There's not enough meat on the bone there to really make it worth a trade, in my opinion. No. Like I said, I would have liked to have seen a bounce up to like 747. Could have shorted it up here with some room for downward movement. This right now, could we like go into a dive right here and dive down to 742, 740? Yeah, we definitely could. It's just in fact, to me, it even looks like that might happen. I just don't see the risk reward setup, and my outs are fuzzy. I don't have a winning out. Where's my losing out? It's just too... It sucks. It sucks when I have a feeling, you know, a bullish or a bearish feeling, but I don't have the outs or the clear targets to make it work. And this is one of those situations. I have a bearish feeling here. I just don't know where my targets are, so I'm not going to play it. To me, that's the difference between high conviction plays and hunch plays. Do you have a target? Can you clearly see where this market is going? Like if I could clearly say, we are headed to 740 right now, that would be a high conviction play. Instead, I feel like we're heading lower. I just don't know how low. So that's hunch. If I could see a specific target, it would have a thesis behind it. I would feel much more confident in it. Vaguely feeling bullish or bearish, not worth it. So yeah, as I was driving around yesterday, came up with something because I was looking at the charts on my cell phone, thinking about trading. This is a good rule of thumb. Now, I'm sure almost all of you have played chess online, right? Chess.com. if you don't have the concentration power to play chess at your best level, you don't have the concentration to be trading. For instance, I can play chess online, and if I'm focused, if I'm really tuned into it, giving it my full attention, I might be 1500 elo, right? I can beat the bots at that level. If I'm half paying attention to it and rushing it, I can get beat by 1200 bots. There's a big, big difference depending on how much I'm concentrating on that game and whether I'm rushing that game or not. And the same goes with trading. And it's a good rule of thumb. If you are in a position where you can play chess at your highest level, then you have enough focus to be trading. If you were to play chess and you'd be rushed and you wouldn't be focused and you'd play a half game, you shouldn't be trading. In other words, if you're on your phone at a restaurant or you're running around, if you know you wouldn't be able to play your best chess game, you shouldn't be trading. Okay? It requires the same level of concentration and focus, right? You have to be able to tune in on it. Mainly because you need to be aware of your emotional states and what are FOMO plays and what are not FOMO plays. So I think that's a good rule of thumb. If you can play chess at your best level, you're in a good spot to trade. If you're somewhere out and about doing something where you wouldn't be able to play chess, you shouldn't be trading. So call that like the chess rule of concentration. Anytime you wouldn't be able to play chess, you should not be trading. Did I write that down? I think I put that in my notes. My notes. So many notes. Maybe I didn't. Anyway, getting a little resistance here. 744.3. It doesn't seem to be relevant. We didn't even touch 744 yet. Lot of waiting. This is day trading. One of the main reasons I'm streaming is because I'm baffled by the disconnect between what you see online, the content you see online of either gurus and coaches and newsletter guys who are talking about how easy it is to make money, or you've got guys posting results all the time that are making thousands of dollars. And I know from experience, from doing it for 12 years and from everybody I've ever met who's traded, nobody has that experience trading. Nobody. Every real person who trades struggles with it immensely. It's difficult. It's high pressure. It's high stress. Even when you win, you feel like shit. There is nobody I've ever met. There is nobody I ever know, other than the guys who are selling shit, that are actually successful at trading. So, yeah, that's the main reason I stream, because I'm really tired of the gap the gigantic chasm between content creators and their results and what every other retail trader actually experiences. It's bizarre to me. I mean, only in trading, right? Only finance do you have this image of what it is, this sort of glamorous, easy, system-based, everybody wins, everybody's smiling, you're on a yacht, putting up 4-digit, 5-digit numbers every day. Nobody. It's just, in my experience, nobody lives that. Nobody lives that. This is what it's like. Either A, sitting around waiting for trades. If you're lucky, maybe you get a handful in a day. Or you're probably over trading and losing money via commissions and slippage and friction costs and kind of burning through your account too quickly. But I'll tell you what's not happening. Whatever those guys show you, where they're placing 30 trades a day and making 4-digit green numbers, 8,000, 5,000, that is not happening. That is not reality. It's like, it's trading content is like porn, It's like, that's not real sex. People don't have sex like that. Trading content is a lot like porn. It does not correspond to the reality of what actually occurs. I like that analogy. I really do. That's spot on. Porn is completely unrealistic sex, and trading content is completely unrealistic of actually trading. So yeah, trying to make something that resembles the reality of trading. All right. 745. SPY. If I wanted to go short, I could do it here. I mean, if I really wanted to. Do I want to? Well, now that we've dropped 60 cents and we're breaking below a level, yeah, I do want to. It's a little late now, though. Anyway, I had a moment up here where I could have shorted it. One of the challenges of trading, things go fast. You got to make decisions quickly. I'm going to get another bite at this if I want to. Okay, I'll do it. All right. Stupid play. All right. Anyway, I took a quick short here. I'm going to set my out slightly above 745. So let's see. 6 above this, 516. Right there. $33 risk. And this is like a guaranteed loser. Should I even do this? Yeah, you know what? 744. Is there any way to break below 744? No, you know what? Fuck that. I exited. I don't know what my upside is here. I don't know what my upside is here. Threw away $6 on that. Whatever. All right, jumped the gun a little bit on that one. Got out of it pretty quickly. Again, please don't follow my trades. I am not a profitable trader. Just to be clear, if you follow my trades, you will be unprofitable, like me and like every other retail trader on earth, except for the guys who make social media content. Yeah, it was a bad trade. I shorted it at 745. Do I think there might be a resistance level at 745? Yeah, I think there might be. Maybe that's a ceiling. So you short it there, hoping that 745 is the ceiling. That was the idea that flashed through my head. But then I realized, where do we go? We haven't even touched 744. 744 is going to be a resistance level. If it's not a resistance level, 743.5 is going to be a resistance level. So you can see my risk reward was $33. I mean, my potential loss was $33. I'm trying to pick up 1 point. My reward is going to be $50. That's how much 1 point in SPY is worth with one MES contract. Shit risk reward for a play I don't even feel that confident in. Yeah, I don't feel that would I say we're headed lower rather than higher? Yeah, I would. I have a little bearish lean here, but I don't know what shape that's going to take, when it's going to happen. And even the bearish lean, I'm not raring to go on it. I'm so bearish, I'm like I feel like we will probably head lower today rather than higher. But again, I'm not, I just don't feel that strongly about it. It's one of those like 57% chance we head lower as opposed to 43% chance we head higher. And more importantly, I don't know the shape it will take. If there was going to be momentum and we were going to head straight lower, if there was a pull pulling us lower right now, ready to go, then you'd have a tradable momentum. You'd have a tradable direction shape. If we're going to head lower, but it's going to be in a roller coaster, we might bounce up to here before we head lower. In which case, any short play you put on right now will be a loser because you'll get bounced out before we do head lower. So I'm not all that confident in the direction, and more than that, I'm not confident in the shape of the move. It's 10 a.m. Not a huge fan of this shape. We don't really have a morning V. We've got a few more minutes. If we bounce up to here and get a little resistance, I'll sort of count that as a V shape. Wouldn't mind that. Looks like we're kind of headed that way. That would sort of be a V shape. Not a particularly clean one, but it would fit. It would fit. Yeah, I like this. This kind of fits now. These two candles sort of make it look V-ish, which is what I want to see. I want to see a morning V. I really do. That's like, it's familiar. It's the way 3 out of 5 days, 4 out of 5 days, you know, I'd say almost 70% of days, you get a morning V, either a V or an upside down V to start the day, the first 20 to 40 minutes of the day. So when I see that, it makes me feel like the market is trading sensibly. And last week, all of last week, we really didn't see it. That shook me a little bit, made me think something's off here. Something's not right. Something weird is happening. So seeing the V shape again is a good thing. What I wanted to do today is work on my whiteboard. I have a whiteboard above where I trade. I also have a handy handheld whiteboard. Don't ask me why I don't use it, but I'm going to use it today. Let's write down our rules. How about that? Because I've been working on my rules. Number one, the chess rule, right? Just outline this one. If you don't have the focus or the concentration to play chess at your best level, then you should not be trading. That's it. Okay, number one, chess rule. Concentration, baby. You need concentration. If you cannot concentrate, if you're doing something else, you cannot trade. It's a big one. It's important. It really is. It's all too easy to trade on your phone or... Trading's got this bizarre thing to it where people, including traders themselves, while they're in the middle of trading, somehow think that you don't need to be focused on it to do it well. Every job on earth, every task requires focus and concentration to do correctly. Again, whether you work at McDonald's, filling orders, if you're playing on your phone while you're doing it, you're going to get the orders wrong. So why do people think they can mess around while they're trading? Bad idea. So that's rule number one. If you don't have enough concentration to play your best chess game, you don't have enough focus to be trading. I put it as a number 2 here. For me, it's one side. Why is this? Hold on a second here. I don't want to show myself connecting. I got disconnected. All right, reconnected. Number 2, for me, it's one size. One size. One contract. When I start breaking that rule, I'm almost certainly on tilt. Although I am trying to come up with a scenario where I do increase my size, mainly if I'm running really well, which is almost comical at this point. I can't remember the last time I had like a day where I made over $100. But if I was to have a day where I was up $200, maybe that would be the time to size up. No other scenario works for sizing up. You absolutely should not be sizing up when you're losing. Should not be sizing up at the beginning of the day. Only if you have proven that you are having a really good day and your reads are on and you're feeling good, that's the only time you should be scaling up. But generally, stick to one size. Now I have written down here, what does my gut say? Hard to put that one into a rule. I mean, I do think you have to take your gut feeling into account. It's more than even whether your gut is right or wrong. It's not even about that. I mean, I like to think, given my experience level, that my gut and my intuition are pretty good. I do think they're pretty good, actually. But it's more than that. If you're going against your gut, if you're trading against it, for whatever reason, let's say the setup or there's a breakout and the technical pattern, the chart looks like you should be bullish, but your gut says bearish, you are going to be torn on that trade the whole time, and you're not going to trade it well because of that. If you're trading against your gut, whether your gut is right or wrong, you're not going to trade that correctly. You have to trade with your gut, or else it's right off the bat a low conviction trade. And low conviction trades don't win. So you do have to listen to your gut. You should at least check in with it before you place a trade. Because if it doesn't agree with what you're doing, you're going to lose. Check your gut. Number 4, give your trades room to breathe. This one's important. It's important. Give your trades room to breathe. A lot of the times I'll place trades, and they're what I would call fishing expeditions, where I'm trying to catch a top or a bottom, and I set a really tight out because I'm trying to like nail the top or the bottom. Those plays, again, almost always losers. If you don't give your trades at least a little room to breathe, they're going to get stopped out. I mean, that's just what happens. And there's a flip side to that. You have to give your trades room to breathe. And on the other side, there needs to be enough meat on the bone to make the trade worth it, right? So if you're going to give your trades room to breathe, whatever that may be for you, that's going to be different depending on your trading style. Swing traders, maybe you give your trade a few points. Day traders, maybe you give it a few 50 cents, a dollar. It depends on what you're trading, whatever. The volatility of the instrument, your time horizon. But you got to give your trades room to breathe, or else you're just going to get stopped out. And in order to have a good positive risk reward profile, there needs to be enough meat there to make the trade worth it. So give your trades room to breathe and meat on the bone, as I say. Basically, the trade has to be big enough to make it worth the friction costs, all right? We're not scalping here. We're not algos. We don't have zero commissions and no slippage. We're retail traders. Every trade costs us commissions, slippage, spreads, friction costs. There has to be enough space, what do you call it? Enough profit to make it worth it. You start trying to catch $5 moves when your commission for a round trip is $3. It's just simple math. That's not gonna work. I'm getting hot in here. Hold on. By the way, I don't. This is our SPY chart. QQQ is up 1%. Bitcoin's at 67,000. That's interesting. Oil's at 128. Don't even want to talk about that. I should have caught that move, but moving on. Anything in here I don't consider tradable right now, which is 746.5 down to 744. So that's this range. Basically 744 up to 746. That's our intraday range right now. Anything in here, in the middle here, noise. If I felt strongly bearish, maybe if we hit a top right here, I could short it, try to catch it, a down move. Like I said, I do feel a little bearish, but not strongly enough to actually make that sort of play. So yeah, so anything in this area right now is not playable. I mean, should we include that in our rules? A lot of wrong, a lot of waiting. LW, LW. It's not really a rule, though. It's just more of an idea. Day trading is a lot of waiting. That's reality. A lot of wrong, a lot of waiting. A lot of bad trades, a lot of sitting around like this. No sugarcoating it. All right. Our last rule, give your trades room to breathe and have some meat on the bone. Number 5, stick to your outs. This one probably should have been higher up, but stick to your outs is pretty important. I tend to stick to my winning outs. Sometimes I move my losing outs, but more and more I'm thinking that's just a bad idea. Yeah, I don't like it. Your plays should be binary, okay? In other words, they should be win or lose. Like betting a sports game, right? Your team wins or it loses. Like playing blackjack. You win the hand or you lose the hand. The closer you get your trades to being binary outcomes, I won or I lost, the better it is for you psychologically. Number one, you can begin to accept that when you win, it's a winner, and when you lose, it's a loser. And you don't have to second guess what you should have done differently. I either win the trade or I lose the trade. That's good for your emotions. It's also just good for your trading. It's good for your outcomes. Once you start tinkering with your outs, once you start second guessing things, that's just negative EV. I don't know how else to say it. Anytime you start tinkering with a trade that you're in, sure, once in a while you'll save yourself some money here and there. But the vast majority of the time, all you're doing is just pulling money off of the table. Tinkering with your outs is negative EV. Just shouldn't be done, honestly. So stick to your outs, make your trades binary. I hate to write this one down because I don't follow it, but it's have a cool down period when you lose a trade and have a hard stop for the day. If you're down X amount for the day, that's it. Not trading. Okay, well, it looks like we're seeing some action here. If we break higher, do I have any interest in this? I really don't. I mean, I can tell you right off the bat, I don't. There's nothing about moving higher here that interests me. Why do I feel that way? Do I feel that way? I just do. I just do. I'm not interested in playing a breakout higher here. Going back to that rule with my gut doesn't like us going higher here. It really doesn't. Yeah. In fact, I'm gonna try to short it one more time here. My gut, for whatever reason, is saying lower here. Could be wrong, but this looks like it could be a top because it was a top earlier today now, and I think the risk reward is there. I can put my stop loss right about here, $25. I can put my take profit down here, $71. Yeah, I like this trade. This is okay. One more tick higher. There we go. All right. So I'm basically just betting that this is where we opened the day, right here. It's where we topped out about 10 minutes into the day. Looks like we sort of bounced off it a couple of minutes ago, I hope. Anyway, it's 746. I mean, that's the level. 746. I'm playing it as my gut sort of says bearish here. I've got a resistance level here at 746. I got a nice target down here, which is just the bottom of the V, right? I'm not trying to even break out of the V, just the bottom of the V. And so it winds up being a risk reward of $26 to $71. I think that's a nice risk reward. So I made the play. And if I lose, that's okay. If this touches my losing out and I lose, let it go. This is a very simple, straightforward. Taking a small swing. If it doesn't work, it doesn't work. Move on. All right, rule number 6. Have a cool down period. And by cool down period, I mean, if you take a bad loss, honestly, I'm thinking if you really any losing trade, you should probably step away for a little bit. So have a cool down period, but even more important than that, have a maximum daily loss. One of the few good ideas I've borrowed from other people. A maximum daily loss is a good idea. You should have a number where if you lose X amount, you're just done trading for the day. There's no other way around it. if you hit a certain number, you're almost certainly tilted. And your odds of winning for the rest of the day are severely diminished. And snowball days are what blow up bank accounts, trading accounts, both. So you should have a set maximum loss for the day. Pissed that this trade is going to lose. Motherfucker. I like that one. My macro was off too. Okay. Whatever. I liked that trade. Let it go. Didn't work. Well, the chart setup certainly looks bullish right now, so I would not fault anyone for being bullish here. I'm personally not, so I'm not going to get long here. My plan right now, it's 10:30. I'm going to wait for 11 a.m. basically. That's my plan. Time of day matters. Just does. It affects the market. And 11 a.m. is an important time period. You often see changes of mood, big dips, big counter moves at 11. A lot of the time, you'll have your morning V in the morning, then you'll start heading higher or lower. Between 11 and 12, you'll get a move that disagrees with the rest of the day. Right? If we're heading higher all day, which it looks like maybe we are, maybe this is an accumulation day now, BOF day, a slow grind higher. 11 to 12 is when you'll get that big pullback. Even if the whole rest of the day you're sort of grinding higher throughout it. Or if you're moving lower all day, 11 to 12 is when you get the big bounce higher. So right now, I'm just going to wait for 11 a.m., close to 11 a.m. Let's see how high we want to go. Could be right here. We're at 747. Could be 748. Could be 749. Could be 750. I don't know. But my sense here is that we might climb for the next half an hour, get to 11 a.m. That's when the pullback comes. And again, my sense, my gut will agree with that for whatever reason. I wish I had a better explanation for why I feel that way, because right now everything is sort of pointing to a BOF accumulation day, a slow grind higher. I wouldn't want to take the long side here personally. So I'm going to just let it grind higher, wait for 11 a.m. I feel like 11 a.m. will be the time to catch a down move. I just don't know where this is going to top out. I have no idea. All right, that was rule number 6. Have a cool down period, a maximum daily loss. Number 7, one I never actually follow, but should follow. Your entries should always be set with a limit or stop order. You shouldn't put your entries in with market orders. Again, hard for me to say this. I never actually follow it. I almost always enter with a market order, but there's really not much point. I mean, you could just enter with a stop or a limit order. It's just as easy, and it'll almost always get filled, and you'll get a better price. And plus, you'll feel more that the trade was neat, organized. So this is a rule I'm going to put down. Entries should be stop orders or limit orders, not market orders. Even though I don't follow it, I have to make an effort to follow it. Yeah, there's just no point in using market orders. We use market orders because of a sense of FOMO or that we might miss something. That's why people use market orders. That's why I use market orders. I know it. Because I'm trying to make decisions quickly and I don't want to feel like I missed something. But the fact of the matter is, if you put a limit or a stop order in, it'll almost always get filled. You'll get a better price. You'll feel better about your entry. It'll feel like you have a plan. There's a lot of upsides to it. Should really be done. Again, I don't really follow this run, but I should. Putting it down as a rule. Number 8. Number 8. This one's easy enough. One and done. One and done. This is another rule that should have been higher up because it's very basic and should always be followed. One and done is if you lose a trade, that's it. There's no second chance. There's no revenge trade. There's no, I should have done this. I should have done that. What you should do is set your outs correctly from the beginning. Set your losing out to be an invalidation level. Whatever that may be, whatever you think the invalidation level is. If you hit that invalidation level, the trade is invalidated. That's it. It's done. The thesis is over. So set your outs correctly and then one and done. No second chances. You lose a trade, you move on. again, with this market, the chart is saying bullish here. I mean, we broke above where we opened. We broke above the 746 resistance level. I don't feel that confident in it. Something to me says bearish. Although it does look like it's forming an accumulation day, a BOF day, grinding higher. I don't want to play that, though. I wouldn't have any faith in it. So it's 10:36 right now. I'm waiting until 11, the witching hour, the pullback hour. If we get to 11 and we're up at like 748, that would sort of be a perfect little setup to me. If we get to 11 a.m., like on the nose, and we're right at 748 on the nose, or 749 on the nose, I would feel pretty good about getting short there. But we've got 20 minutes until 11 o'clock. The odds that I make a trade before then, pretty slim, unless something happens. Would I play anything in the middle here right now? No. No. No, I wouldn't. No, definitely wouldn't. Yeah. Honestly, the only way I see myself making a trade before 11 a.m. here is if we were to somehow break below the bottom. Highly unlikely. I mean, if we were to break below 745 right here, would that be a play? I'd be semi-interested in that. We're still a while away from that. But would I be? I don't think it's going to come to that. If I had to guess, I think we're going to continue to creep higher until 11 a.m. But would I be interested if we broke below 745? I mean, you see a little bit of a level here, right? I mean, the problem again with that, you break below 745, what's your winning out? 744? That's a shitty trade. And yet 744 would probably be a resistance level. Yeah, no, it wouldn't be. I don't see it being a good trade. I'd rather we creep higher here until 11, so I can put a trade on that has some room to win. We're at 746 right now. Yeah, I don't know. I feel bearish, but we break below 745. It's all hypothetical. We break below 745. I mean, what are you trying to do with that? Trying to go to 742, I guess? Got a lot of walls you got to get through to get there. You got to break through a lot of resistance levels to get down to 742. That's not a good trade. Boy, we have been stuck in this range forever. The 740 to 750 range, just not going away since mid-May, May 13th, June, July. Well, 2 months. 2 months isn't nothing. Little over 2 months of 740 to 750 SPY. It's a good amount of time to spend in a range. And I really thought this earnings season would decide whether we're going to break higher or lower. And like I said, here's our 6-month chart up here. It does look like we're breaking lower. We had the flag pattern. There's our flag. And it does look like we've broken below it. So to me, it does look like we're breaking lower. On the other hand, we're in the middle of earnings season. Earnings season is usually bullish, and we've been in this 740 to 750 range for 2 months now. A breakdown below 740 would obviously be very bearish. Breakdown below 730 would be extremely bearish. Extremely bearish. Bitcoin has come off its lows, though. It's back at 67,000. I found Bitcoin lately to be a rather good forward indicator. Anyway, waiting till 11. 15 more minutes. Hopefully we can get to a nice high at 11. 7:48 at 11 a.m. I would like that. I've written down 8 rules here. I could write down 8 more, honestly. I could write down 18 more. There's no shortage of rules and ideas, but these are sort of the main ones, I guess. Let's see. So we've got the chess rule. Must concentrate on your trades. If you can't play a chess game, you should not be trading. One size, one contract. That's my rule. But you should have something similar, which is only one size, one risk level for your trading. Check your gut. Make sure your gut and your trade agree with one another, all right? If your gut and your trade do not agree, it's going to be a losing trade. Give your trades room to breathe. Make sure that you have enough space for it to be a winner, all right? You got to have meat on the bone. If you don't, it's no good. You need to have space to breathe and possible actual profit to win. Stick to your outs. This one's pretty simple. Don't move your outs. Set your outs when you enter a trade. Don't mess with them. Have a cool down period. If you lose a trade, especially a nasty one, take a break. You should have like a mandatory cool down period, maybe like 15 minutes, 20 minutes. And have a maximum loss for the day. Implosion days, meltdown days. That's the main way people go broke. So have a maximum loss for the day, where after that point, you no longer trade. Number 7, entries should be set using stop orders and limit orders, not market orders. I don't really follow this one, but I should. It's just good practice, right? Your entries should be made with stops and limit orders. It's neater. You'll get better prices. There's just no downside to it. We only do market orders because we feel FOMO, so it's a good idea. Use stop and limit orders to enter trades. And one and done is number 8. No second chances after a losing trade. You lose a trade, you're done. All right? Set your outs correctly. That's it. Set your outs correctly from the beginning, where you actually think the invalidation level is, where you think the winning level is. And if either of those outs get hit, that's it. It's over. Move on. All right, there. 8 basic rules. That's what I wanted to work on today. Not so bad, right? $10.49. All right, approaching 11. Would have liked to have seen us move a little higher than this. 7.47. Shit. Okay. All right, I'm going to put a sell limit in here. Right at this top, I'm going to set that out pretty close, violating the let it breathe rule. Just because we're getting close to 11, And maybe this 747 is the top. So I set it here, set a limit order to enter. If we grab this, I'll get in. I'll set my exit to right here. I'll only be risking a few bucks. And I'll set my winning out down here at the bottom of the daily low for the day. The closer we get to 11, the worse price I'm willing to take, because I do think 11 is sort of the, like I said, the witching hour. So I'm sort of willing to accept worse prices as we get closer to 11 in terms of where I enter. This is 746.94, 0.93. This is the problem with setting limit orders to enter. You get in this mush here where you're like super close to hitting it, and you're like, well, God, what the fuck? What if the trade takes off and I don't enter it? That would really suck. Yeah, that would really suck. That would suck balls. That would really suck. If this goes like straight lower and I somehow miss this trade, I'm scrapping the whole setting limit order rule. Throw that right out the fucking window. That'll be complete bullshit if we take off here. This is going to go right now, isn't it? I'm going to have missed this by a tick because I tried to set a limit order as my entry. No, don't think like that. It'll go and get your entry. It'll get your entry. Get your fucking entry, right? It'll get your entry. Wait for the fucking entry. Wait for the entry. It'll touch the entry. It'll touch the fucking entry. Just give me the fucking entry. $10:55 a.m. It's getting late. Getting late. Getting late. This is really uncomfortable, to tell you the truth. No wonder why I don't set limit orders and stop orders as my entries. This is making my entry really fucking uncomfortable. Yeah, I feel super uncomfortable with this. Okay, just let it go. It's like, is everything I do fucking wrong? Is that just like, is that the way it has to be? Somehow every step I make is incorrect in some form. Hit the fucking entry. Hit the entry. Hit the, you motherfucker. Fuck. Fuck. That was it. You fucking touched it. You son of a bitch. Okay, I'm just motherfucker. Okay, fuck that rule. Fuck that fucking rule. It's 11 a.m. Fuck that rule. Cost me 30 cents and a lot of aggravation. All right. I had said setting stop orders is good psychologically to enter trades, limit orders. I don't think I feel that way anymore. That was unpleasant. I don't want to do that again. That was deeply unpleasant. All right. Risking $23 to win 112. Now that's good risk reward. In fact, maybe it's a little too good, to tell you the truth. I want to give myself a little more room than this. All right. Risking $30 to win 112. That seems a bit more less crazy. That out's a little low because we might run into a wall at 745. I don't like to be greedy. Let's be a little bit more reasonable here. All right, risking $30 to win 80. I've set my out a little bit above 745. Yeah, that seems much more. Somebody is knocking on my wall. Hold on. One more hour. For gaming. 1 hour. Want me to bring the headset up? Okay. Stick to your outs, right? Let's just stick to our outs. Okay, we're at 746. Obviously, 746 might present a wall, but my out's at 745. I'm counting on 745 being the wall. Boy, I'm really torn about whether I should be entering these trades with limits and stop orders after that. Like I said, that was really unpleasant, and I don't know. It makes sense to enter with limit and stop orders, but not if it's going to mess you up psychologically. 746. We touched 746. Could be a bottom. I don't think so, but it could be. That's for sure. Not looking promising here. Bounce off of 746. Pretty big bounce. Pretty big bounce. Not the kind of bounce I wanted to see. No. No. This is looking grim. Yeah, any sort of bearish thesis will go out the window with this out. QQQ hasn't stopped climbing. Yeah, this looks ugly. That's that. Okay. Back to the drawing board. Yep. 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 Bit surprised by that one. I thought that one was a winner. I really did. Thought my first trade was a winner too. Yeah, like I said, any sort of bearish thesis, that's gone now. I don't see anything here. I don't see anything worth trading. Looks like a BOF day at this point. Just going to grind higher. Lots of pullbacks. Like this. Up, pullback. Sort of up, I guess. Pullback. A little higher now. Pullback. Where did we open? 746.3. We're at 747.3. We're up one fucking point on the day. Makes sense, I guess, for a grind higher. But where does the grind end? 748? 750? Should have traded yesterday. Yesterday had some catchable moves. I don't see anything here. Don't see anything. Other than a slow grind higher with lots of pullbacks. $11.18. All right. 748. I shorted it. I did. Tried to set the damn limit order. Didn't even take. Wound up doing a market order. Great. 746 is the obvious exit, but I'm going to go for 745 again. How many ticks above this high do I want to put my out? 6. 44.75. That's it. That's the trade. Risking $17 to win 139. Make of that what you will in terms of odds. Probably about a 7-1. So about a 1 in 7 chance I actually win this trade. So I shouldn't get that upset about it. Is it a fishing expedition? Yeah. Oh, shit. It's raining. Fuck. Just what I needed. The rain and the plumbing problems. Be right back. You guys see what the outs are, right? Let's see. A little above 748, 748.2. Winning out 745.1.2. So 748.2 loser, 745.2 winner. Odds of this trade winning, very small, but let's try it. Be right back. I have to handle the rain. Well, this trade is what it is. I'm hoping that I'm in this trade for the next 2 hours, personally. I would not mind that, because if we're going to hit my losing exit, it's probably going to be quick. If we're going to hit my winning exit, it's going to take a little bit. But, yeah, I would put my odds of winning this trade at about 1 in 5, 20%. Judging from the distance from here to here, from there to there. I mean, that's the best way to do it, right? If you're right in the middle of the two exits right here, you got a 50-50, theoretically. When you're all the way up here, 20%. Anyway, not a terrible trade. If I lose it, so be it. It'll be a loss that is just a loss. Nothing weird about it. Honestly, there's been nothing weird about the two plays I lost earlier. I've just been directionally incorrect, which I'm not happy about. I mean, I don't like when my read on the market is wrong, but it is the cleanest way to lose, you know? Just picking the wrong side. Nothing weird about it. No glitches. No moving around my exits. No second guessing myself. Just pick the wrong side. So if you're going to lose a trade, I guess that's the way to do it, right? Just get the side wrong. And that is what's happening today. I don't know, like I said, I don't know why I'm bearish. I guess that 6-month chart, with the broken flag lower, I just got a bearish vibe today. That's all it comes down to. And if it's wrong, so be it. That's the cleanest way to lose. Just having a wrong read. Although I will say most of the time when I lose, I don't feel like it's like this. I feel like it's because I set my outs incorrectly, my entry was sloppy, shit like that. Not because my read was just off. But today my read has not been good. I'm going to leave this one up for just a little bit. Going to have to take care of some chores soon, but let me leave this up for just a little. See if I get bumped out. I don't want to sign off with a trade open, to tell you the truth. Let's give it another 20 minutes, see what happens. that sandwich, and then we got to get out of here. All right, chores to do, chores to do. This is going to be where I sign off. This trade is unresolved, which, like I said, is probably a good thing for me. Although, if I had to guess right now, it will probably break above 748. And honestly, that would be sort of a textbook long, really. I wouldn't be too happy about it personally. Like I said, I don't know why. I just have a bearish feeling today. Wish I could shake it. Because, yeah, if we break above 748, I mean, that's just textbook. You've got resistance here at 748. We've shown momentum higher throughout the day. You break above 748. You put your winning exit at 750. You put your loser at 747. And, you know, you get a 1.5 to 1 risk-reward ratio. I mean, that's, like I said, that's as basic as they come. I mean, that would really be a standard play. I don't know. I don't know how I'd feel about it. I should stop arguing with the chart. The chart is... There's nothing bearish in this chart. So, I'm not sure why I feel that way. Yeah. That's the situation. Anyway, got some shit to do. Yeah. 748.2 is the loser. 745.2 is the winner. Odds of this winning very, very small. Yeah, this just looks like a BOF day. Just a very straightforward grind, accumulation higher, staircase higher. Up, down, up, down, up, down. By the end of the day, we've grinded higher. 3, 4, 5 points from where we opened. Usually 3. So we opened at, yeah, 746.3. Maybe we end up at 750. You know, 748 wouldn't surprise me. It's a couple points higher, but it's just a grind higher slowly. That's certainly what it looks like. Yeah. All right. Well, hopefully this trade doesn't resolve itself right now. Looks like it's about to. Looks like it's about to. Yeah, it's about to. Fuck it. Terrific. Terrific. Another fantastic play. All right, that's it. I'm done for the day. Perfect end to a perfect day. 3 trades. 3 trades I really didn't felt pretty good about. 3 losers. That's trading. That is trading. Good luck, guys.